Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Checking in on Bitcoin. So last video we looked at, we had that tight channel on the hourly, volume dropped off, and then we saw the clear bull break on increasing volume. And now we were looking to form a higher low. So we did see a bit of a pullback, big high volume bearish candlestick. Bulls are in the middle of trying to recover from that bearish candlestick. But keep in mind, we do still have an overall uptrend. We can draw an uptrend line. I hit the lows of the real bodies of the candlesticks. And this line I would put right at that level. And then I would zoom in to make sure it's nice and tight. I'm hitting these supports here. And I'm hitting this support here, not letting any candlesticks on the hourly close below this uptrend line, and you can see the lower wick bounced right off of that level. So it hits a few times, and I know that it is then a valid uptrend to be watching because it has been hit more than 3 times. I want at least 3 touches on that line to be looking at it seriously. And in terms of this horizontal line of support, I'm going to put it, why didn't I put it at the low there? Why didn't I put it right up to the real bodies? I'm looking back at some previous action. So I'm looking back here, and I'm seeing resistance. Then this candlestick dipped and closed right at this level. Then the next candlestick, the low of the candlestick bounced off of it. So right there, I see 3 different candlesticks playing around that line. And then I move over here and I see the bulls buying the dip off that line. So that's enough of an area and enough price action around this point that it is valid enough for me. And then I zoom out and I can even double check further by going back and look at this line perfectly acting as support for that one little bounce attempt candlestick before heading down to lower lows. So always want as much price action around your trend lines and support and resistance lines as you can have. And in terms of resistance, we can draw a downtrend line on the little lower high pattern that we now have forming. And I would put that right there, making sure no candlesticks on the hourly are closing above my downtrend resistance line. So I've got a channel to be watching between this longer uptrend support line and this little shorter term downtrend line. And we will likely see one of these break overnight. If we see a bull break, we're looking up to 900 psychological and then the highest price we've seen of 916. And if we get a bear break, we're looking down at 852, the low of that pullback, and then down here to 827. So always drawing. Obviously, you don't want to overclutter things. And if you ever find yourself overcluttered and confused, remove lines. But as of right now, I do like the way this is set up, and I like that tightening range. So we'll check back in. Let's check in on GBTC. And GBTC consolidating after the bullish break from that tightening range and looking for a higher low to form and then a higher high. The bulls are. So they need to break 120 to see that higher high. Current support 112.60. The low of yesterday was 113. So the bulls are attempting to defend those levels. There is a gap down here, but There's a bunch of gaps on this chart, so whenever I see a chart that has a ton of gaps on it, I pay less attention to those gaps, but it's worth noting it's down at 109 and would fill if we began to consolidate back down towards that level. The weekly time frame is trying to see a bullish candlestick after those 2 big red weeks, and you can see overall, the weekly time frame, the bulls still look fine by maintaining these higher lows over pretty much since August. So higher lows still intact. Bulls want to hold 105, the low of that pullback, and keep progressing here with a nice uptrend that we've been seeing over the past year. So Bitcoin, tightening range, bulls showing some life, 916 resistance after 900. We'll check back in tomorrow, see how it plays out, and I'll leave all these lines up so we can see how these support and resistance lines play out as well. Thanks for watching. See you tomorrow.